Welcome, everyone, to another backstage interview at our virtual metals investor forum. I'm joined here by Darin Labrenz of PureGold Mining. Thanks for taking the time today, Darin, to dive into a few things a little deeper. I think the thing that I wanted to start with is, PureGold stands out among gold stocks right now for being a company that is, coming up to first gold. There's not very many teams that are actively building mines right now, so that stands out. But I think all on top of that, you're fully funded, you're building a mine, gold is sort of 6, 7 months away, and you've announced what's a pretty substantial exploration drill program. So that's a bit unusual. So talk about the decision, the funding, and sort of the rationale for that.
Sure. Yeah. Thanks, Gwen. It's a really unique opportunity, if you will. We're 5 months away from first gold pour. We're fully funded through to completion and have a really healthy buffer in place to carry us through that working capital period through to commercial production. But we see this as a scalable asset. We've kind of laid out a phased development approach, and out of our broader 2.1 million ounce indicated resource, we ring fenced 1 million ounces of reserves, and that's what we're constructing right now. But we've got resources that sit outside of that footprint that are already defined. They're open for expansion. We've already done early stage engineering in terms of how they might be mined, and we're really excited about bringing that on, into the mine plan ultimately, and potentially through an expansion of the plant and all the benefits that come with that. So a few weeks back, we were approached by Eric Sprott, and he's already a key shareholder of ours, and he said, you know what, I like what you guys are doing. I really love the 8 zone. It's high grade. It reminds me of Kirkland Lake. These are his words, and I want to help you guys target this aggressively. So he backstopped, a $15 million flow-through raise directed for exploration. And so, yeah, we find ourselves in a position now where we've got 30,000 meters of drilling that'll be completed with 3 rigs over the course of the next 9 months, and then next year we'll continue. So, at the end of the day, we're probably looking at about 50,000 meters of drilling between now and the next 18 months, really to drive that aggressive exploration work.
And talk about how that's being spread out. You certainly have defined deposits that, like you say, you've already wrapped preliminary economics around and envisioned how they could fit into a mine plan. So how much effort is going into expanding, better delineating those versus targeting things like the 8 zone that do not have a sort of PEA level asset on them, but are exciting?
Yeah. So we've got really three main goals of our drill program. Number one is converting resources to reserves. So we're underground. We're targeting expansion to the mine plan, to inferred resources, really looking to build up that reserve footprint in the first few years of mining. We've got 2 surface rigs here that'll be starting up in the coming days on Wedge. So that's one of our surface discoveries that has a currently defined resource, and the goal of that is really to improve the confidence in resources, convert inferred to indicated, and grow resources in that area to determine what the true size of that is. So we'll be targeting Wedge, Fork, Rusted South zones for that purpose. And the third aspect of our program, which will start later this summer or early fall, is targeting the high grade transformative potential that we see in things like the 8 zone, which truly is higher grade than the overall mine plan.
Yeah, for sure. I can't imagine how busy things are at the Madson Project these days. You're building a mine, and yet now you're also kicking off 30,000 meters of drilling. It must just be a beehive. Not that you've been able to be there physically for some time, but it must be a busy place.
Yes, I feel fortunate that our VP operations has been trapped there since February, and it's been an extremely busy time. We're underground. We're doing our pre-production development work. Surface construction is ongoing. We've really got the mill ready to start installing all the new components that are go in there, and we're ramping up a workforce. 18 months ago we were a dozen employees, and by the end of July we'll be closer to 150 employees. So it's going extremely well on site.
Fantastic. Let's shift focus to sort of the investment angle. Obviously, PureGold has had a nice share price move in the last little while, and I stated in sort of the Q&A before that was looked to me as part of that classic golden runway re-rating, where a company goes from only spending money to making money, which is, the reason that we build mines. And so what would you say now to an investor who's considering PureGold and sees the share price having already moved a fair bit? What would you say is the value opportunity here for an investor looking at the company?
Yeah, so that's again a great question. Let's assume for a moment that we don't discover anything else, and the Phase 1 mine plan that we're building today is all there is, which clearly we don't believe.
Yeah.
I do think you're right. I think we're seeing a re-rate as we move closer to production. I think there's still quite a ways to go. So the question you ask yourself is what is 100,000 ounce per year producer worth? And you can look at precedent transactions that have happened. Atlantic Gold was bought for plus 700 million by St. Barbara for 100,000 ounces of production. Queen Integra acquired for close to the same amount by Eldorado for a similar production profile. Alamos bought Richemont for the Island Mine, 100,000 ounces a year, and they paid $1 billion for it. And so that kind of sets a precedent transaction case for that scale. We can also look at existing producers. So if you look at Wesdome today, they're $1.5 billion market cap with 100,000 ounces a year production. So we think we got a long ways to go on a re-rate perspective to be valued comparable to our peers today, just based on our mine plan alone. But then you layer on the exploration work we're doing, the resources that sit outside of the reserves, the opportunity to bring those on as part of an expanded plan, and I think that there's a lot of value to be grown through exploration and incremental additions to the mine plan, to the plant, and throughput that'll come out of that. And so the way I like to look at this is you buy PureGold today, you're participating in a re-rate, and all of that exploration activity, the 50,000 meters of drilling and the potential for expansion comes for free. And so I think there's a real opportunity for value creation here.
Absolutely. Not to mention the other upside possibilities being the rising gold market and the fact that you're producing gold into a Canadian gold price environment, which is a real advantage today.
Oh, absolutely. I mean, even again, million ounces of reserves at 9 grams per ton year over year, we've seen a $700 increase in the Canadian dollar gold price. That's $700 million in cash flow year over year. So the benefit of being in a constructive gold market and the double bump you get from being Canadian costs is hugely impactful.
Absolutely. Well, good luck keeping all the balls in the air. There's a lot going on for PureGold, but that's a good thing. Like you say, if you want to capture the re-rate, you got to be building a mine. And if you want to layer on potential upside from that, you've got to apparently be also kicking off major drill programs, and you're doing all of it. So thanks for diving into those a little bit. And as always, stay in touch. We all look forward to keeping up with the PureGold story.
Thank you. Really appreciate it, Gwen.